Hey, it's Zane, welcome back. Hope you're doing great today. And it's a gloomy old day where I am here in southeast Queensland, but we've had a lot of rain the last 24 hours. But I wanted to get this video out, and today I thought I'd do a little bit of a different format. I'm going to read to you a little bit today, and we're going to share some comments. So I'd love to hear your comments in the comment section below. But I want to talk about specifically the road to a $43 million Bitcoin. Could Bitcoin become, the value of one Bitcoin become worth $43 million? And what's really interesting about this is, if you've heard of Jeff Booth before, he's definitely one of the top thought leaders in the Bitcoin space. He's definitely one of my favorite gentlemen to listen to. His level of intellect and understanding about Bitcoin and what it represents and how it is going to transform the financial system, I think is right up there with Michael Saylor. And he was on the Bitcoin Paradox podcast just a few days ago, and I'd really encourage you to tune into that. In fact, I'll leave it in the show notes if you haven't already done it. I think it's about a 60-minute viewing, but it's well worth listening to, because in it, Jeff explains the case for a $43 million Bitcoin, but he actually explains that right now, Bitcoin's true inherent value is already at that level. And this is really difficult to get your head around. And I know that when you first hear this, you kind of think that, it's a crazy thought. You might think that I'm crazy for even talking about it. But please bear with me, because even though it sounds crazy at first, when you actually start to listen to Jeff's rationale behind this, and you understand where Bitcoin is going, and the fact that it is the world's first truly global free market that is absolutely decentralized and secure, that can't be changed or corrupted in any way, and the fact that it is inherently deflationary and is already repricing every good, service and asset that we have on earth. When you realize all of that and you understand where we are on the adoption curve, you start to realize, well, actually, this makes a lot of sense. And so I want to share with you 4 key points here that Jeff made, and then we're going to have a conversation with this. So I'd love to hear your thoughts on this. My little doggy in the back is making some noise, but she's going to quieten down. Sorry about that. But let's talk about this. The first thing to realize is that, how do we get to a $43 million Bitcoin? Well, in simple maths, Chili's here to say hello. Some of you have been commenting that Chili is not appearing enough in my videos, so he's along for the ride today. I think I'm going to get him a Bitcoin hat or a Bitcoin collar. What do you reckon? Let me know in the comments what you think about that. I think he's due for a Bitcoin collar. Anyway, how do we get to $43 million? Well, in simple maths, we know that the global asset market, total addressable market for assets worldwide, when you take into account real estate, bonds, stocks, currencies, fine art, collectibles, etc., 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 it's about $900 trillion. And when you divide 900 trillion by 21 million, which is the number of Bitcoin, the most amount of Bitcoin that there will ever be, you get around $43 million. And so what Jeff is saying right off the bat is that, because Bitcoin is the only true form of value that we've ever really had, the only true free market that we've ever seen, he's already essentially pricing the world in Bitcoin. And when you do that, and you realize that Bitcoin is absolutely scarce due to the 21 million hard cap, then you realize, well, that's where he gets the 43 million from. And so then you start to say, well, how could that be, that Bitcoin is worth 43 million? That then means that everything else is worth nothing. And this is the really hard part to get your head around. And part of the reason for that is that most people don't realize that over the last 50 or so years, since we've been on this fiat standard, this debt-based system where currency is backed by nothing, remembering that up until 1971, currency was actually backed by a hard asset, a commodity called gold, which has been money for 5,000 years. But in 1971, that promise was broken. And so since that time, what we've seen is that all of the assets have been over-financialized. And so now what we have is wasted premium driven by debt, in other words, the issuance of credit backed by nothing, to essentially prop up and financialize and overinflate those assets. You only need to look at real estate. And so real estate now has layers and layers and layers and layers of wasted premium that make up what is known as its price or its market value. But that price or market value is a long, long way from the true inherent value of that asset. Because as Jeff explains, every item, every asset in a true global free market should always fall to the marginal cost of production. And so when you consider a house, for example, and you really strip back all of the wasted premium, the stamp duty, the rates, the agents' fees, the maintenance, the insurances, the market inflation driven by debt because banks are lending, issuing credit backed by nothing to inflate the prices of homes. When you strip all of that out, all of that wasted premium, and you get back to the marginal cost of production, which is what a true free market, how things should be priced in a true global free market, you realize that there's not a lot left. And so this is why the first point to understand when we start realizing, why Bitcoin is such an incredible value proposition for the future is to realize point number one is that Bitcoin is a superior form of money. And the reason for that is because it has a 21 million hard cap. And we've never seen that before in any asset class on earth, let alone an inflationary currency like every currency is. And so Bitcoin is a superior form of money. And when you consider that Bitcoin is based on a protocol that is based on truth and rules that cannot be broken, and when you compare that to fiat currency, like the Australian dollar, the US dollar, the Canadian dollar, the Kiwi dollar, the pound, euro, all of these currencies, they are based on a system of extraction or theft and rulers who can change the rules, a handful of people who sit in a little echo chamber behind closed doors and decide the currency policy, and the people have no say. And so what they're doing is they're constantly diluting the value of our currency. And so if you're saving currency, be it in your retirement account, in your bank account, or whatever, essentially they are stealing purchasing power from you through their policies of currency debasement and money printing. And so this is why Bitcoin is a superior form of money, because that cannot happen with Bitcoin. It is a protocol that cannot be changed. It cannot be corrupted. There is nobody to coerce. There is nobody to go to and say, you must change the rules of this. There's no CEO. There's no issuer. And it's the first time in history that we've ever had this. And so that's point number one. Bitcoin is a superior form of money that is absolutely scarce. Most people have no idea about this yet, but I know you do, because if not, you wouldn't be on this channel. But this is why Bitcoin is going to absorb so much of the financial energy of the world, because of the fact that it is based on truth and it is fixed and finite. Point number one. Point number two is that there is what is known as an asset monetization argument. And I kind of just touched on that, so I won't go too deep into this, except to say that, once again, most assets are not held any longer for the utility value. What they're held for is their financialization, store of value proposition, which has only come into being essentially since we've had fiat currency over the past 54 years. Since 1971, when fiat currencies were no longer backed by anything. And so what we've seen over the past 50 odd years is assets such as real estate, stocks and bonds, etc., everything that is tied to the debt-based fiat system has been financialized and manipulated to become a store of value. And so we can't conceive of a world, for as long as we're in the fiat system and measuring our life and everything that we own and our value, if we're measuring it in an infinite currency that can be debased and corrupted and printed into oblivion, and I'm not judging you for doing that, because I've done that my whole life, and it's only now that I'm starting to see the light and realize that, hang on a minute, I want to participate in this world first, truly global free market. That's where I want to spend my time and energy, and that's why I'm doing these videos. Because the penny dropped for me about 6-12 months ago that this is where I need to be spending my time, because I can see how this is going to transform my life, my family's life, and the world. But we need more people out there being spokespeople for this transformational protocol, which is what Bitcoin is. And so if I stay in this other system of extraction and dilution, which is a zero-sum game where there are winners and losers, I'm not going to be leaving, I guess, the right message and legacy for my family and my kids and everything, when I should know better. And so this is why I'm over here spending more time in this value system known as Bitcoin. And so the asset monetization argument is that, again, there's so much wasted premium in traditional assets, and as Bitcoin becomes widely adopted as a neutral, incorruptible, deflationary store of value, much of the $900 trillion that makes up the total addressable market of assets worldwide, much of that is going to find its way into Bitcoin. So I want you to contemplate that. Let me know your thoughts on that. We're halfway through here. We've gone the fact that Bitcoin is a superior form of money, absolutely scarce, can't be corrupted, can't be adjusted, 21 million. And the fact that Bitcoin is going to absorb so much energy because every other asset has been over-financialized and over-monetized, and it's no longer a reflection of their true utility value. And we know this with companies that are on the stock market as well, that are trading so many multiples of their true earnings. So the true value of those companies is inflated and has been financialized, so people can just participate in the share market. And again, it's not representative of the true value of those entities and their profitability and the value that they bring to the world. So it's kind of similar in the stock market as well as real estate. So, point number 3 is network effects. Network effects. And it's all about digital value consolidation. And this is another point when you listen to Jeff Booth, and you'll pick up on when you listen to this video that I mentioned at the top of today's show, that we are now in the digital age, and value consolidates into dominant networks. In the digital age, value consolidates into dominant networks. And we've seen this in the last 15 to 20 years with the likes of Google, Amazon, Facebook, Apple, the iPhone, Netflix, etc., Uber. The value proposition moves into the digital networks, away from the traditional bricks and mortar and analog versions of those things. And so this is another reason why, as we stand on the cusp of mass worldwide adoption of this new monetary system, as people wake up and realize what Bitcoin actually is, and the world really starts to come for Bitcoin and starts allocating capital to Bitcoin and moving their capital from other assets that they know are being repriced by Bitcoin, as institutions and the financial planning industry starts recommending Bitcoin to their clients because it's the best performing asset that is outperforming everything else on earth, as the US government and nation states around the world start lining up to acquire as much Bitcoin as they can, as all of these things start to happen and we have a fixed and finite monetary protocol that you and I can participate in that only has 21 million units, what do you think is going to happen to the price and value proposition of Bitcoin over the next 5, 10, 15, and 20 years? That's the question. And so network effects is essentially this situation where we know that a network, the value of it is directly linked to the rate of adoption, and we know that the value or the adoption curve of Bitcoin is tracking the likes of the internet and the iPhone and every other major technology that we've seen over the past 20 years that has become ubiquitous in society. And the same thing is going to happen with Bitcoin, and you can see it on the trajectory of the adoption chart. So many believe that because Bitcoin is decentralized, meaning nobody controls it, and secure, the fact that it is decentralized, open source, and secure, as a monetary network, it could become the base layer of the global the global financial system, and in terms of value exchange. And so people are going to realize that if they're going to store their financial lives in an asset, they want to store it in an asset that cannot be debased, that the rules cannot be changed, that is portable, that is decentralized, that they are in control of, that is permissionless, where there is no counterparty risk, where there is no risk of seizure. And this is where the world is going. They're going to move towards Bitcoin because smart people are going to want to store their value in something that cannot be diluted or taken from them. And this is part of the network effect of Bitcoin. And point number 4, and this is the final point today before I end this video, is the fact that Bitcoin is an asymmetric bet. Bitcoin is an asymmetric bet. And what that means is that because there is only 21 million Bitcoin, and we know that fiat currency is infinite, is going to continue to be printed and debased and inflated into oblivion, because of that, Bitcoin has no top. Fiat currency is infinite. And when you start to price Bitcoin in fiat currency, you realize because you're pricing a finite currency or a finite asset versus an infinite currency, what you're going to see is that the finite currency is going to have no price cap. And so Bitcoin has no top because fiat currency has no bottom. And this is the asymmetric bet when it comes to Bitcoin. So if you're pricing your entire life in the Australian dollar, for example, or the US dollar, but you have the opportunity to store your time and energy in a fixed and finite currency or asset known as Bitcoin, you are taking an asymmetric bet because you know that the value of that dollar is going to continue to fall and be eroded and be diluted. But because you're storing your value in a fixed and finite instrument, when priced in that infinite currency, the value is just going to continue to rise into, basically without any cap, without any limit to that price. And so, I've just made a comment here. The fact that there's only 21 million Bitcoin, fiat currencies like the US and Australian dollar will increase forever to ensure the solvency of the system. So they need to create more debt in order to keep the system solvent, right? And the more debt that they create, the more that asset prices inflate, and the more debt they need to create in order to authenticate, substantiate, or to keep solvent that collateral. And so therefore Bitcoin will capture a large portion of this 900 trillion asset market that we have. And so even if there's a 5% shift into Bitcoin from this 900 trillion, so imagine if there was just a 5% movement of this 900 trillion into Bitcoin, then that would imply a valuation of at least $2 million per Bitcoin. But when it comes to Jeff Booth and his thesis on this, he says that 43 million really does represent a world where Bitcoin will become the dominant monetary protocol, where Bitcoin will become the dominant value system, the true free market that the world flocks to, institutions, governments around the world who have growing national debt, insurance companies who can't afford to continue to pay out all of these natural disasters without raising more premiums around the world. And so at some point this debt system is going to break. And so more and more companies, institutions, governments around the world are going to move towards Bitcoin. We know it's a fixed and finite asset. And as smart people who have assets in the traditional system start to realize what Bitcoin is and the fact that it's repricing those assets, waves and waves of capital are going to head towards Bitcoin as well. So let me know what you think. I'm going to leave it there today, but 43 million, the simple maths are 900 trillion addressable asset market divided by the 21 million hard cap of Bitcoin gets you to $43 million. Now we know that that's not the price today, but could that be the price in the not too distant future? That's the topic for today. I'd love to hear your thoughts. Please share your comments below. Do you think this is realistic? Do you think Jeff Booth is on drugs or crazy? I don't think he is. I think when you start listening to Jeff Booth, you'll be extremely enlightened. He is one of the smartest guys in this space and has some really interesting takes on the financial system and the world. So I'm going to leave the link to that video below. Other than that, please like, share and subscribe. Share your thoughts. And I want to thank you for being here, and I look forward to seeing you in the next one. This is Zane signing out. Have a great day. Bye for now.